All right, here we go. Let's get started here. Types of policies. We're in question number 5. All right, this is a good one. This is a good one. You ready, bro? Here we go. All of the following statements are correct regarding credit life insurance, except I think we did this one already. Yeah, we talked about this one already. So the benefits are paid to the creditor, yes. The benefits are paid to the borrower's beneficiary, no, it's paid to the creditor.
Yeah.
And then the D was the amount of insurance permissible is limited for the per borrower. Yes, permitted per borrower because it only covers what the borrower owes. All right, let's go to the next one. Number 6. An insured has his spouse own a home. An insured and his spouse own the home. When the insured dies, the insurer, o sea, the insurance company, pays the remaining balance. There it is of the home. What type of life insurance policy is this? This is mortgage redemption, which is also known as decreasing term. So anytime it's talking about borrowing money for a credit card or credit life or mortgage, it's talking about decreasing term. Okay, bro? We just talked
Okay.
about this. This is 2 questions in a row about the same thing. Got it?
So so anything that has to do with home loan would be mortgage redemption and decreasing term, right?
Yeah. And then the other
Okay.
one, the previous question was on credit life. Remember, credit life is the same thing as decreasing term as well.
Yeah, so basically when you're taking out money in order to do credit or home stuff, it's always gonna end up being decreasing term though, right?
Exactly. But don't mix it with cash value life insurance, where you do pull out a loan from your cash value. That's different. The cash value is your money. You're pulling out a loan from your own money. The insurance company is lending you your own money.
Okay.
Okay. That's
Yeah.
totally separate than credit life or
Because this
mortgage
is
redemption.
technically not your money yet.
Exactly. This is a real true loan.
Yeah, like a
Like a
lot of money.
Yeah, like a mortgage, that's a mortgage loan. Credit life is for credit cards. So it's different than cash value.
Okay.
So don't mix it up. All right. Next one, modified life policies. What happens on the premiums? So remember this? The word here is modified. This is, by the way, it's referring to a whole life insurance
Oh, okay.
on how you make the premium payments.
Is higher than this.
Okay, so on modified life, this is how it works. The premium payments start
Mhm.
low, but then all of a sudden they get modified to a higher premium and then they stay fixed to age what?
100.
100. That,
So
that's a visual of modified life right there. That's how the payment works. The payment schedule starts low.
so it would be D. It is level at the beginning and increases after the first few years.
Exactly.
Okay. Modified life.
Got it?
And modified life is always, what was
It's
it? Whole
always
life?
whole life, always whole life. So it's not another policy that you have to memorize. No, it's a whole life policy with a special premium payment method. Got it?
Yeah, always to 100 too and everything.
Whole life is always to age 100.
Okay.
Let's go to the next one. The policy owner of an adjustable life policy. Okay, stop right here. When you see the word adjustable life, what should you be thinking about?
Um, we just went over it. Oh, okay. Just
Yep.
universal life.
Yes, sir. Universal life. You're getting it. All right, now let's read it. So we're talking about a universal life here. Okay, wants to increase the death benefit. Which of the following statements is correct regarding this change? He could increase it because you could adjust the life insurance. That's what adjustable life means.
Hmm.
The death benefit cannot be increased. D is wrong because of the word cannot. It can be increased.
Okay.
This one is not true, B, because it has to be exchange for a new one. No, you could do it without it.
Yeah, and the same policy, right?
And the death benefit can be increased only when the policy has enough cash value, has nothing to do with the cash value. So this one's wrong too. The death benefit can be increased by providing evidence of insurability. Yes, that's the answer right there. The answer is A.
Okay, so you could increase the death benefit by the evidence of insurability.
Yeah, evidence of insurability means that it has to go through underwriting. They have to qualify. What if they're sick? You know what I mean?
Yeah, basically like proof.
You have to prove that he's healthy. Which of the following terms best describes the coverage provided by term policies as compared to any other form of protection? So right here we're talking about term policies. Is it the longest form of protection?
Term policies? No,
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 it's whole life is the longest.
yeah,
Is it the most comprehensive? Nope.
no,
This is the simplest. Term is the simplest.
and it can't be the greatest because
Yeah, it's the greatest in terms of highest. Highest. It's not the least because it's so cheap. Term insurance is so cheap that you could get a lot of coverage. You could get the greatest amount of coverage. That's what it's really referring to, the greatest. And it is the greatest type of insurance that people should have because you
okay,
could you could get a little bit of a lot of coverage for a little bit of money. So it's high coverage, high value, low cost. High value, low cost. Got it?
okay.
Another reason why whole life sucks and universal life is super expensive. And the reason they're expensive is because they have all these surrender charges and everything that eventually you end up paying out of pocket the benefits. Number 10, which of the following is true regarding the insurance amount of credit life insurance? What are we talking about here? Credit life?
Yeah,
Remember? What kind of term is it for credit life?
it is a decreasing term.
Yep. Decreasing term. So what's the answer? Saying which one
Okay,
is true?
okay, the creditor can only insure the debit amount only.
Yes, that is true. That's going to be the answer.
Yeah, because the amount of coverage can be greater than the amount owed.
Nope,
That
it
doesn't make
cannot.
sense.
It
An
cannot.
allowable amount of coverage is determined by the state insurance commissioner. That
No,
doesn't have
no,
anything to do with
is
it.
determined to the amount of loan, the amount that's borrowed.
Yeah. And then the unlimited amount of coverage, no.
Unlimited, no. So this one's kind of easy. This one's they give it away.
Hopefully there's something like that on the test, huh? Oh, crazy. I'll just play.
Hopefully.
Yeah, I know.
All right, two more and then we're done. All right, bro.
Okay, that's fine.
Who is the owner of Credit Life Insurance?
The creditor.
The owner of Credit Life Insurance is a creditor. Yes, good job. There you go. Last one. Which policy component decreases in decreasing term?
Um, and decreasing term insurance would be the premium.
What is decreasing term? Credit life. Why does it's not premium, it's the death benefit. But why?
Because oh my bad.
Decreasing the reason it decreases, bro, is because the reason it decreases is because the face amount because eventually the loan is paid off.
Oh yeah, yeah. We just went to that.
We
The
just
loan
went
is
through
paid
this.
off. Decreasing term.
All right. So look, the selling life insurance is awesome, but you want to make sure that you sell term insurance and cash val and not cash value policies because they're super expensive and you pay more than what you should. Okay, so let me give you an example. Let's say you get your life insurance policy and you sell cash value life insurance. By the way, the type of policies that have cash value are what?
Um,
Universal life and what?
and term life or
No,
whole life?
term doesn't have cash value.
Oh yeah, whole life.
Whole life. Term and whole life, it's insurance and savings bundled together. But the
Okay.
savings, so this is an example of it. They're gonna pay 295 a month for the coverage. And this, if you multiply that times 12 times 30, because the client is 35, let's say, and they wait till age 65, they're gonna get back $106,000 if you do the math.
Hmm.
Sounds good just by leaving it like that, right? But the
Yeah.
problem is that after 5 years, within the first 5 years, there's no savings because there's a thing called a surrender charge. What is a surrender charge? Remember? It's on the test.
Um, I forgot what it is, but I just know that it's the first 5 years of no savings. And that's it's just called the surrender charge.
Yeah, the surrender charge is a fee that they charge you if you surrender your policy, if you cancel your policy.
The surrender charge
And
is
number
a
two,
fee.
and by the way, once there is money, you could borrow it, but they're going to charge you 4 to 8% interest to borrow whose money?
Your money?
Your money. Is that good or bad?
That's bad, yeah. Surrender charge is
That's
a big.
right. So that's why we don't that's why we teach people not to sell it because it's taken away from people's money. And also number two is you lose your savings if you die on whole life policies. You're paying for two things, but you only get one. Like for example, right here, if the husband dies, Mary only gets 100,000. It's a level death benefit. Option A is level death benefit. Get it?
Okay. Level death benefit.
Yep. Level death benefit. So what we're gonna do is we're gonna replace this cash value policy with something better. We're going to get the 295 and we're going to buy term and invest the difference. So term insurance, we do two separate accounts. One account is the life insurance policy. We're going to use out of the 295, we're going to use $84 to pay for the life insurance of 300,000. And then the rest of it is $211. We're going to put it away in a Roth IRA where they're going to have $438,000 tax free. Okay, so if the client dies prematurely, they get 300,000. What's better, 300,000 or 150,000?
Yeah, 300,000.
And they get whatever's in the savings because they're separate accounts.
Yeah, that's
Okay.
crazy. That's good. Yeah.
And here's another one. If the client lives to retirement, he gets $438,000 instead of $106,000. That's so we basically turned this $106,000, we turned it into 300,000. We tripled it or quadrupled it.
Yeah, we basically quadrupled it.
Which plan would you want? Cash Valley Life Insurance or term insurance and invest the difference?
Yeah, term insurance, and that's the difference.
That's a no-brainer.
Yeah.
But which one do you think most people have?
The cash value of life insurance.
You know why? Because agents love to sell cash value because they get a huge commission out of it. The commissions on cash value policies are almost 3 to 5 times greater than term insurance.
Oh, really?
Yeah, yeah, they're crazy because basically they're getting money from people.
To put in their own pockets, basically.
Yeah, if you were to sell a policy to your mom, which one would you sell?
Yeah, the term insurance.
But what if cash value pays you more?
I mean, but me personally, Eventually, if I make enough sales, I would be able to
There you go.
make up
You
for the
you
money.
just need to sell more, right?
Yeah.
Not screw people over.
Yeah, because at the end of the day, you still build a trust with them. I know a lot of people that got out of life insurance just because they were getting sold cash value and everything. And that from there, they don't even want to do life insurance no more.
Yeah.
You know? And that's the thing that sucks. Life insurance is good. I didn't know how good life insurance was until I started looking into it. Well, until I started doing this.
Yeah. Yep,
And I'm
yep.
really 25.
Yeah, so that's what we do, bro. That's what you're gonna do. And Primerica is an amazing company to work with. I've been, so hit me up. Like if you're interested in selling life insurance, this is for the watchers, okay, bro? Because I know you're already in it. So if you're interested in studying with me, like the way Brandon is studying with me right now, you have to be part of my platform. And to be part of my platform, you have to join our company. So if you're in Primerica, don't hit me up, all right? Just talk to your broker. But if you're not in Primerica and you're planning on working with another company, then hit me up so I could show you a little bit about more details about my company. Better than the ones I showed you. There's a lot more. Our company's been around since 1977. We're listed in New York Stock Exchange, ticker symbols PRI. We have over 5 million clients in the area of insurance, almost 3 million in the area of investments. So we're not like a new company. We're not like trying to figure this thing out. We're not a rookie company, right? We have over 150,000 agents. Just to give you an idea, if you were to add up State Farm, Farmers, and Allstate, that's less than 100,000 agents. Our company alone is 150,000 agents. So that's insane, right? What we do is we help people become properly protected, not just life insurance. No, properly protected. Buy term and invest the difference. Invest for the future, for retirement, learn to become debt free, and learn to make additional income by teaching people how money works. Money works 24/7, 365. It's either working for you or against you. But if you don't know how it works, you're always working for money. It's always working against you. But if you know how it works, then it's working for you. Does that make sense? So that's huge, man. That's how we do it. Okay. Here's the cool thing about our company, man. Like you could get your license on your own. Most people get their license on their own, right? They pay for the pre-licensing courses, the insurance fees, exam fees. This is in California right here. The investment license, mortgage license, it's over $3,000 in cost, but with our company it's only 124 bucks. And right now the company has a discount of $74 in the month of December. The out of the 124.99 goes to pay for the three licenses. Right? So what would you rather pay, $3,000 or $74? Right? Look at that. So basically it's these costs right here. And then $25 is monthly for a virtual office where you can have your CRM system, live training videos on how to do the business. So you could even learn this business without me. You could submit your state application, submit applications for without paying an additional fee. So you have a POS system with unlimited transactions. And then you get email marketing and CRM. What do you call it? Email marketing websites, landing pages, all included for 25 bucks a month. Where else can you find a place that you could run a business for 25 bucks a month? Think about that. So, anyways, that's it, my brother. We're done with our training. We're done with our class. Do you have any questions?
Yeah. What do you think I should do in order to try to understand more for our next session?
What do you mean?
Like what chapter should I study more, or should I just continue taking the test like I did last night, or what would you recommend?
Right now, what I want you to do, bro, is I need you to take, we just took this exam chapter 4. I need you to take 5 quizzes on exam 4 now. 5 of them.
Okay. Okay. And chapter 5 too? Might as well.
Chapter 5, do 5 and 5. 5 on chapter 5, 5 on chapter 4. And every time you do it, send me a screenshot and then we'll go from there. So just do that for the next 3 days. You should be ready to pass your test next week. Easy, slam dunk, done deal, home run. You got this.
Okay. Just the two chapters?
For now, we're gonna master the other ones, okay? And
Okay.
also Quizlet. What kind of score are you getting on Quizlet, bro? The guillotine exam.
Oh, I haven't done the guillotine exam because I just been studying.
Bro, I need you to do the guillotine exam. So there it is. You got more homework. Guillotine exam.
Okay. All
And
right
for
then.
those of
Yeah.
you for those of you that are wondering what the guillotine exam is and all that stuff, that's only for people that are part of our platform. All right. So if you're not part of our platform, it's $74 to join in, just like I showed you right now. And you'll be part of our platform and I'll hook you up. I'll teach you how to get your license.
All right. Then thank you, Raul. And if anything, I'll schedule another one so I can show you my progress.
Let's do this, bro. Let's do it. Let's
All
schedule
right.
another one, all right?
All right. Then thank you.
All right, later, bro.
Later.